Good day, folks. I hope you are doing well. I hope you're having a good weekend. I hope you're having a great day. This Pip here, and I'm back. Been a long while since I posted my last YouTube video, and I'm back now for posting. I think more more educational contents, and I hope you find this video insightful. Today, we're talking about MMXMs and they are used in the financial markets. This is one of the most advanced concepts and one of the most important concepts, which is once you have a good understanding of MMXMs, then you have unlocked the market as it is, or rather you have cracked the code of the algorithm. So stick around, and this promises to be a fun ride. Let's get into the video. What are MMXMs? Market maker models. On the chart here is the daily chart, the US 100, and if you look closely, if you look at the candles, you see I've highlighted this range in blue. I've highlighted this blue range. It's a fair value gap. In this blue imbalance, begin to look for the most important signature in price, as I've shown you. The most important signature in price is a low or a high formed in an imbalance. In this case, this is a market maker buy model. So I'll be looking for a high to form at this point. I want a high to form there inside of an imbalance and get displaced through with another fair value gap. What I mean will be shown to you in the next slide. So what you are seeing is a clear depiction of a market maker buy model where price obviously was here. So price gravitate lower, reaching this point. When price got here, we consolidated. Then we saw a sweep of the candle low. Then we saw price gravitate higher to the eye icon, which I've put on the chart. And this is a clear depiction of a market maker buy model, which means I'll be looking for buys once I've confirmed the most important signature in price. I'll be looking for buys, or I'll have a bullish bias till my targets or till other points of interest are reached. So next slide. And if you look right now, this is the hourly time frame of the daily market maker model, which I just showed you. If you look closely, the most important signature in price, which I always tell you to monitor, is what I'll zoom in for right now. So pay close attention as I zoom in. As you can see, this is the high. The high formed in an imbalance. As you can look here, I annotated it as an imbalance. When the high formed in an imbalance, what did we see? So price drop lower aggressively, taking out this liquidity pool. Then what did we see? So a follow through on this low. We saw a follow through the high, and we formed this red fair value gap. Hope you are zoomed in. Hope you are seeing it clearly. Form this red fair value gap. Then from then on, you could begin to look for higher prices. That's it. It's that simple. You begin to look for higher prices, and as you can see, from then price began gravitating higher. There were many buy opportunities in this leg, but for the sake of this video, I'll be teaching you just market maker models. I will not be touching on entering trades. I'm just focused on education for now. And once you understand this, man, your understanding of price is way above what the regular retail minded trader has. And man, once you begin to understand how the market moves from point A to point B, or how price delivers in a market maker model, man, you begin to be you begin to look at this marketplace from a different perspective, and you begin to see the potential in the marketplace, and you begin to see insane opportunities moving forward. This is a sell model. Market maker sell model. As you can see, I wrote on the chart, we look to buy in a sell model when the red cycle low gets run, keeping in mind an underlying bearish order flow. Okay, we have already found that this the most important signature in price, which is a low. Let me zoom in. A low formed in an imbalance, get displaced through, and another fair value gap forms. See price retrace into the fair value gap. We already know that we are in a sell model from this point on. And what did we see later? We saw price gravitate towards the downside. You might be thinking, okay, so does it mean we will only sell in a sell model? Obviously, absolutely not. We can also buy in a sell model, but it takes a lot of practice, a lot of practice to be able to do that, which I'll be giving you a hint to that. We look to buy in a sell model when the red cycle low gets run, keeping in mind the underlying bearish order flow. Buy point. If you look at the buy point closely, you see that the market dropped through this red low. You could set your alerts if you are looking to trade this move upwards. If you are looking to trade a buy move, you could set your alerts on this red range, this red line, so to say. When the alerts get triggered, you wait for the time to be right, and you want to see a session open low. That's for the people who have been here, been in this trading space for a long time now. But if you are a beginner, you don't want to be focusing on entries for now. You want to learn how price moves from point A to point B in a market maker model. So this is a market maker sell model where the left hand side shows how the right hand side is going to deliver. Okay, for instance, how am I going to get a high probability sell in a sell model? Or how will I be able to catch the most, that is the biggest price runs, the biggest price swings in the sell model? You'll be able to get the biggest price runs in a sell model when a retracement has occurred from a low that formed in an imbalance. Retracement occurs from a low formed in an imbalance. You can see this low is very crucial. If we are going to be able to buy from this low and we know that order flow is bearish, we can also sell as well when we see the purge of this high. We saw price take out this red low, then we see this deep retracement upwards, which we love to see. We should love to see. Once you understand why I'm laughing, you will be able to get a clearer picture of what I'm explaining. You want to see a run against the sell. You know that we are in a sell model already. You want to see price dropping aggressively, but how do we look to engage in such an environment? We want to see some sort of a retracement can be looked at as manipulation, because retail minded traders are already looking at this point as a clear trend line. If you can look well, you see that a clear trend line can be drawn. You see the moment that we purged this high here, could begin to look for sales in a sell model. After we were able to anticipate this move, this buy move, but we know that order flow is bearish, meaning that price has to draw lower. As you can see, price took out the high here, then we saw a massive drop to the downside. It was NFPD, of course. I was not even looking at the charts. I was absolutely away from the charts. And if you look closely, you see where the low formed. The low formed in this week here. It's called a week of a candle. It was a very long week. I could have anticipated that price was not going to take out the low yet. Could anticipate a deeper retracement upwards. But that's the sell model done. You can see the schematic by the side. You can screenshot this and keep this in your notes, as well as it will be very crucial to your understanding of price. And one thing I want you all to go back into your charts. Do not just take my words, everything I say here. You should be able to go back and put in the work, put in the hours, looking at the charts, being able to understand these signatures as they present themselves in the marketplace will help you long term, will help you to build capacity in order to read price more efficiently, because the market is driven by an algorithm. If you're able to understand what this algorithm is saying, then you'll be able to understand price and you'll be able to capitalize off market swings. And that's for that. And now we're looking at the buy model. And I've been telling you guys about the most important signature in price. Now I want you to look at the charts and be able to tell me what the most important signature in price is. If you are able to tell me, if you're able to tell yourself without me even zooming into to what I'm saying, if you are able to tell me the most important signature in price right now, looking at this chart, at this market maker buy model, then if you're able to do that, then you have achieved a whole lot of mastery. And once you begin to see this over and over and over, you have a great sense of fulfillment, as you know that there's a lot more to come in your trading journey. So I want you to take note of it before I zoom in. This is it. This is a high formed in an imbalance. You can see this red range from the low of this candle to the high of this candle. We are taking the two fair value gaps as consecutive imbalances. So the low form here, and what did we see? Price dropped lower, took out the sell side liquidity before closing aggressively above the same high which formed in the imbalance. Men, oh men, once you begin to see this, then a whole new world opens for you in your trading. Okay, as you can see, as usual, price immediately started gravitating to the upside. See, okay, from the previous example which I did, I say we look to sell the case of a buy model, we look to sell in a buy model when the red cycle high gets run, but keeping in mind the underlying bullish narrative. Because we have seen that price is going to run higher, we could still sell if you have the skill set. Obviously, I told you that once this red highs get purged, once their liquidity gets purged, we could see a deeper retracement. And I told you guys on the other slide that we could set alerts. Once we could set an alert at this point, and once the alert goes off, you could immediately start looking for sales, looking for the entry model which you'll be using. As I've said, I'm not actually going deep into entry. If not, this video is going to be a long one. And we saw a rather small retracement. This would have been a move for scalps. And if you look at this range as well, this one, you can see my highlights, my fingerprints, or so to say, on the chart. You can see this red range. When price displays through it, we actually didn't see much of a retracement, but this would have been a move to scalp. But for inexperienced traders, you could look to just ride the move, the buy move from this point up to this point. And you can see the schematic as well. This is a buy model. We look to sell in a buy model once this red points get reached. And I want to tell you as well, if you are looking to, why would you want to sell in a buy model? Why? You can absolutely just buy the low. You can buy here, you can buy here, you could buy here, you could buy here, you could even buy here. Absolutely insane amount of opportunities present here in the marketplace, just from understanding market maker buy models. Insane. And many of you here watching this video, watching this lecture, might not understand the value of what I'm pointing to you right now, but I promise you, when you put in the work, when you spend countless hours behind these charts, you begin to see these algorithmic signatures every day, man. Then you begin to be grateful for what that which I'm outlining to you out right here in this lecture. So right now, this is the market maker buy model. You can see, wow, it's a textbook model. In fact, imagine buying this low here and holding all the way to this point. My god, that's from like 29,000 to 30,000. That's 1,000 points, right? 1,000 points on the US 100. That is, in my opinion, a crazy amount of leverage, which just by understanding buy model, this is insane stuff. Okay, next slide. This is one of like the most important. I say important because this, by understanding just this, oh my god, oh my god, I'm you don't actually know why I'm laughing, but I hope you will. I hope you will. If you're a beginner right now, you might be lost in these videos. You might be thinking to yourself that, oh, come on, what is this guy saying? What is this guy chatting about? You know. But I'm telling you that if you begin to pay attention to this that I'm about to reveal to you now, your trading will get a whole lot more easier, get a whole lot better, a whole lot precise, and to say the least. Let me continue. In this case, we expect the FVG, which is the imbalance, this blue range, this low of this week, to this high, the gap between, which is this blue range which I've outlined here. In this case, we expect the FVG to send price lower immediately because it's formed through the low. What does through the low mean? If you look, this low, let me zoom in, this low got displaced through, not stopping. You did not see, we saw this big candle through this low. We did not see, and we saw a fair value gap form through this low. Pay attention here, guys. This is really crucial stuff. Pay attention, because once we see this, that the fair value gap is not above here, but rather is below the low. The fair value gap below the low. Fair value gap below the low. I repeated that because that's a crucial piece of info right there. Fair value gap below the low. Immediately you want to see price run lower. Once the fair value gap is created, as at the close of this candle, you could begin to look for shorts. You could begin to look for lower prices immediately without expecting a deeper retracement high up into this point. You want to see this fair value gap function as resistance on price immediately, because look closely, this low was displaced through with a fair value gap. Put in the word, guys. I don't want you to take my word for this. I want you to go back into your charts and put in countless of hours and trusting God, obviously. A lot of this wouldn't have been possible without trusting God. I want you guys to put your trust in God always, and let's get it. In this case, we expect the fair value gap to send price lower immediately because it formed through the low, making the FVG plus low a BPR, balanced price range. So this point, this whole fair value gap plus this low extended to the right, it's a balanced price range. So right, coming back from the other example, in this case, if you have been paying attention, let me read this for you. The only reason why this fair value gap, which is this black, yes, the only reason why this black range, which is the fair value gap from this candle's low and this candle's high, did not function as immediate resistance on price to send price lower, is because the FVG didn't form through the low annotated in red. As you can see, the fair value gap formed above this low. It didn't form through the low. So when this candle here closes, you could expect, oh, deeper retracement should occur from here. Deeper retracement should occur from here. Let me read it. Seeing that the fair value gap didn't form through the low, rather formed above it, then a deep retracement must take place. In a good environment, though. Yes, in a good environment, meaning environment selection, so sorry for that. Environment selection is actually the most important concept which you need in order to like excel in these marketplaces. Knowing when to be out and knowing when to be in is actually the most important skill to master as a trader. And let me get back into the video without digressing. So we saw that this fair value gap formed above this red point, which means we could expect a deep retracement back into the range, and we saw that deep retracement occur from here before price purged the buy side liquidity. You might be thinking, for those who don't understand buy side liquidity is this high this candle here, any swing point here is a buy side liquidity, here is a buy side liquidity pool. Sell side liquidity pool is this is sell side liquidity pool, this is a sell side liquidity pool, this is a sell side liquidity pool. Liquidity to the downside as you that you can target when you are selling the market or when you are shorting the market, they are called sell side liquidity. While liquidity above market price, which you target when you are looking for buys, is buy side liquidity. Buy and sell. Buy, if you are buying, is buy side liquidity you are targeting, and if you are selling, you are targeting sell side liquidity. That is one for your notepads. And as usual, I want to remind you guys that you should not watch this video as if you are watching Netflix or something. You should not watch this video as if you are watching Netflix. You should actually have your notepad by your side to take down important points as I. And again, I've come back to the buy model, but I want to lay an emphasis on the most important signature when it comes to reading price. This low is by far the most powerful signature in price because it formed high rather. Sorry for the blunder. This high, this is a high. As you can see, obviously, this is a high formed in an imbalance. This red range is an imbalance. So this high is the most important high. Once we see this candle close through it, we could immediately begin to look for scenarios that will confirm to us that yes, we are indeed entering a buy program. And the buy program gets confirmed immediately we saw this fair value gap. As you can see, however, I didn't annotate this fair. Okay, this low, the high of this candle to the low of this candle, and you extend them to the right, you can see that is a fair value gap. And what did you see onwards? We saw price begin to gravitate to the upside. Once this low is broken, I know price must fall when an FVG forms. So sorry. Once this high, so sorry to say, once this high is broken, I know price must rise when a fair value gap forms. Rather, now cut this. Thank you, folks, for watching this video, this lecture up till this point, and I hope that you found this lecture insightful. I'll be releasing more of these educational videos over the course of the months, and be sure to stick around because there's a lot that I'll be sharing in a couple months, couple weeks. There's a lot to understand about these marketplaces, and I'll be showing you my reviews, my trade ideas. You could join my free Telegram channel. I'll drop the link in the description. You could actually, but if you want to DM me, you can actually reach out to me from Telegram or any of my links through Twitter DMs, through I do have an Instagram. You could actually reach me through my Instagram, yeah. I'll be dropping my Instagram handle. You could reach out to me through WhatsApp. Yes, you could reach out to me. If you want to deepen your understanding about price or you want to be mentored by me, so to say, you could actually reach out to me. Yes. So with this, we've come to the end of this lecture. I hope you found this lecture insightful. I hope you got great value. Hope you got great value from everything which I've shared with you guys, and hope to see you in the next lectures. Be safe. Be safe out there. Ciao, ciao.